Now, policymakers in African countries need to strategize and mobilize resources to finance the continent's infrastructure deficit that remains persistently large. Andrew Alli, President and CEO of the Africa Finance Corporation, joins me to discuss how African governments should approach development finance this year. Thank you so much, Andrew. Pleasure to have you on the show.
Thank you very much, Esther.
Before we talk about how African countries, economies should begin to strategize and think about better ways, more innovative ways to raise finance, let's talk about the state of growth, especially among top economies like Nigeria, Angola, Nigeria, South Africa. Now, many of these countries remain, dependent on one monoproduct, especially oil, and we've seen growth average around 2%. So share with us the state of growth and how you think that has impacted on the ability to achieve inclusive growth.
Well, if you look at the statistics, Africa or sub-Saharan Africa in 2015 and 2016 has shown the lowest growth on the continent probably since the financial crisis in 2008. And that's not surprising given the fact that the two largest economies, Nigeria and South Africa, both for different but related reasons, were having problems and negative growth. Having said that, I think 6 of the 10 fastest growing economies in the world last year were also African countries, although in terms of size they tend to be small and don't move the overall statistic. We've seen both of the two major drivers come back into positive growth territory, and the forecasts for this year are sort of in the 2 to 3% range for those economies. Which is, better than negative, but really is around the same level as population growth. So on a per capita basis, we still have some way to go. And I think really you need to get back, at least for Nigeria, to a sort of 5-6% rate, which would take a couple of years. This is now, we're seeing this pattern with investments as well. So we tend to be a long-term investor and look at more foreign direct investment than foreign portfolio investment, which picked up very considerably last year, especially in Nigeria. FDI is taking longer because obviously it takes longer for these projects to come on board, but we're definitely seeing a very strong pickup in our portfolio of projects and our pipeline of projects.
Still around growth in Africa. Now, after the commodity price crash that we saw, many countries, especially those dependent on oil, Nigeria, Angola, Nigeria particularly, came up with this broad diversification strategy to diversify away from oil into other sectors. And at that same time, that's when we began to see lower growth in Nigeria. We went into a recession. And experts keep saying that, look, those policies are the ones that would drive that new foundation for, we're moving away from these commodities and we're looking into other sectors, especially agriculture, and we're going to take that up and then begin to build inclusive growth. What is your assessment in terms of how those countries have been able to deliver on that diversification strategy to begin to build growth for many, from the scratch? Because it's like there's still oil, but it's become very imperative that we begin to look away from that.
Yeah, I think if you actually go back in time and take Nigeria and look at the growth in Nigeria prior to the fall in oil prices, actually a lot of the growth was being driven by non-oil sectors, and in particular over the last decade, of course, things like telecom, things like entertainment, etc., have really been drivers of growth. Agriculture has always been there, of course, over the last couple of years, with both what has been happening in a macro sense and also the policies of the Nigerian government. Agricultural growth has really come up. So if you look at the third quarter of 2017 economic growth numbers, which are the latest available, that growth was actually driven largely by recovery in oil, which is not unexpected given how the oil price had up till then and continues to increase, and also how production levels have increased, and agriculture. And actually, I think every other sector, or virtually every other sector, was either zero or negative. I think that we hope to see those other sectors start to improve and to become positive, because certainly the growth, the production capacity of Nigeria is limited. So the growth in oil GDP, as long as production isn't being disrupted for one reason or the other, can really only come from oil price increases. And I think we can't assume that oil prices will continue to increase, although they have done very well and have exceeded, I think, many people's forecasts actually. So the growth has to come from other sectors, and now that the economy seems to have stabilized and to be moving on to more positive footing, one hopes to see the other sectors picking up on growth that has so far been carried by the oil price. Because the oil price growth, I'm not talking about the absolute numbers, but the growth will stabilize now that those effects have come through into the economy. Angola, I think, is more mono-product than Nigeria. So they are further behind the curve in terms of trying to diversify. And frankly, what we've seen is that actually many African countries, even if they look rather diversified, seem to depend very much on one product or another. Those may be agricultural products, they may be minerals. So it's not just Nigeria and Angola.
So it's still a resource
Yes,
issue.
yes.
Why do you think that continues to persist? What do you think is it a lack of proper policy expansion, or what is the problem?
Well, given what I do, I would argue, and I think with some backing, that one of the major factors is really lack of infrastructure. And when I say infrastructure, I mean not just power and transportation, but all the other types of infrastructure that allow other industries to thrive. So, I mean, if you are trying to set up a business developing websites, which you can, frankly, export in the sense that you can have clients abroad, if your internet connection isn't good, if your power is going down, if the doing business climate is poor, so you can't get the payments across borders, that hampers you from diversifying your economy. Similar types of things happen in manufacturing. So things like various types of infrastructure, again, not just the classics, but they are important, as well as making the economies much more business friendly, I think is very important for that sort of diversification.
Interesting. I mean, obviously you're right. I mean, soft infrastructure, and then there's the issue of also interest rates. That on the end of ease of doing business. Now, I was asking you earlier about the state of monetary policy globally. We saw last year the Bank of Canada, the Bank of England, and this year we know the ECB. The Bank of England, the US Fed last year, now the ECB is going to do the same. So it looks like we're going to see that shift away from policy, monetary policy accommodation. So I'm thinking, how does that affect African countries from a debt perspective now? Because a country like Nigeria is looking to reduce domestic debt and look outside foreign borrowing. We've done that by way of Eurobonds, which have been successful actually, and the fiscal authorities tell us that that's an indication of international confidence in an economy like Nigeria. But what is your perspective?
Well, we are seeing potentially a pickup on interest rates. As you mentioned, the ECB has cut down its bond buying. Obviously, the Fed raised interest rates, looking like the Bank of England will be doing the same. And certainly, we in AFC have been trying to pump up our liquidity in anticipation of this. And obviously, if you've issued fixed rate instruments and interest rates go up, that's a benefit for you. And to the extent that that the government of Nigeria has issued those Eurobonds, and they did a fair amount last year. Obviously they've already been issued and therefore would benefit from any increase in interest rates. Unfortunately, though, I think that overall, and this is for Africa, the improving macro conditions in Western countries is likely, on balance, to be more of a strain than a benefit. Obviously, things like quantitative easing and low interest rates have pushed a lot of investors to look at African, and not just African, but other emerging market type of investments, where they're seeking to enhance yield in a very low and sometimes negative interest rate environment back home. As interest rates increase, a number of those dollars, Swiss francs, euros are likely to head back towards their own countries, increasing interest rates and also maybe putting some degree of strain on exchange rates as well, as people sort of swap their local currency back into their home currency to take it back home. So there is going to be a transition. Now, what is very difficult to predict is, how severe that is going to be. Is it going to be a gradual thing? And this is in terms of people taking money out, not so much in terms of interest rates. So is it going to be a gradual thing, which local economies will be able to adapt to more
I
easily?
hear that experts tell us that it's probably going to be in the medium term. So I suppose there's still that short window for African countries to be more innovative in the way they raise money,
well,
cash
there's something around being innovative around raising money. There's just something about also working, and I think this is something that's very often missed, is just working on your macroeconomic fundamentals. If you have a more balanced economy, in terms of budget deficits, in terms of current account deficits, then you're less likely to feel, not that you won't, but you're less likely to feel the strains of these things. And so that's another area that I think economies should work on. This is something that has been signaled, for many years. We had the taper tantrum a few years ago, which was, I think, the initial signal from the Fed about this. So I think, it's sort of would really have been prudent, and I think a number of countries have been prudent to start
taking those
preparing
steps,
for it.
As we continue our focus on how African governments should approach development finance, Andrew Alli, President and the CEO of the African Finance Corporation, is still with me in the studio. Andrew, thank you so much for your time so far.
Thank you.
Now, it's been said this year that Africa will need concerted support for sustainable development financing. I know that, the cocktail of African development finance institutions that come to that African government's approach for especially infrastructure financing. But so the big question is, which is the crux of this conversation, how should African countries begin to approach development financing this year? Where should we start?
Well, I think that, and this is a mantra that we've said for some time, there's actually a fair amount of money that's looking for investments across Africa. The problem is that that money often can't find the right types of investments to put the money into. So as I say, you land in a country and, maybe the airport could do with some improvements, the roads are not good. So there's a clear investment opportunity. But translating that investment opportunity from, a bad road into a project that you can invest in, takes a lot of time, work and effort, and really understanding what investors want. This is called project development, and I think that it's something that's very important for African countries to really figure out how to make, potential projects bankable, and, how then to make it easy to attract investors.
Sorry to butt in. For that example, aren't there like models? I know that it's not a one-size-fits-all, but I know that there are models, PPP, arrangements that government comes in, the private investor comes in, and then they come up with this model that stipulates the terms of agreement, fair play, and all of that. So I'm just wondering.
Yes.
So
there are models. For example, I was just about to state that in Brazil, for example, if you want to do a power project, virtually all the agreements are there, and they just change, one number, which is the price you're selling the power, and you sign up. I think in our even in South Africa, they've had something called the refit project process around renewables, and they've managed to attract a lot of money to develop a lot of renewable megawatts with a fairly standardized process. So I think this is something that countries should adopt, and it's happening gradually. So for example, AFC was involved in a power project in Ghana. A lot of the sort of ideas have been translated into other power projects which have been done, not directly, but at least, the templates have been sort of kind of followed. Some of the structures, so there was a project closed here in Nigeria a couple of years ago called Azura in the power space. Those same structures are now being used for certain other projects. So we're looking at investing in a solar project here, for example, that leverages off those structures. So it's happening.
Some might argue, sorry to butt in again, that yes, it's happening, but perhaps it's not. We're not getting enough of that, because if you look at the number, because every year at IMF, World Bank, I'm sure perhaps also the EFC, you come up with how much Africa needs to spend every year for the next 10 years, and it's usually in billions of dollars to close its infrastructure gap. And if you look at the numbers closely, it would appear that it's just nothing has moved the needle, as it were, and you wonder, all these projects scattered about, probably
Yes.
just not enough. So how can we gain traction?
I was just going to say actually that it's happening, but it's not happening fast enough at all. If, for example, you take power projects, which I think is the single most important area of infrastructure, sub-Saharan Africa, excluding South Africa, probably closes on average something like 2 independent power projects per annum. And the total number of megawatts of those projects probably comes on average to less than 1,000 megawatts, which really isn't moving the dial. So I think that governments have to step up and bite a number of bullets in order to get this done. But I think also we in the sort of private sector and investors need to be a bit more creative as well. That's why, for example, we formed a power company that we closed late last year called Awoniyi, where we merged our power investments with those of Harith, which is a South African infrastructure investor, to create a company that has 7 power projects in 5 countries across Africa, which serve 30 million customers. Okay. The real advantage of this is that it's starting to create a company that has resources, that has the balance sheet to be able to develop its own projects, to invest in its own projects, not to finance its own projects, not always to rely on project financing, which is important but can be slow and costly. We're doing some other similar development of platform companies, as we call them, in other sectors. We've done one that does multi infrastructure projects in a particular region in Gabon and Central Africa. We're looking at doing one that's a road and transportation platform, leveraged off some toll road projects that we're looking at doing.
Now, I'm happy that you've said that there's a fairly good amount of money, out there just looking for, where to invest. And you've also said that, while the money is there and while we have too few projects, deals happening every year, especially in countries that need them the most, governments still need to bite a few bullets. So obviously, from my understanding is that the challenges, the hurdles are the issue here. I mean, if there's money and it's not being used, then there's a problem. So what is it that these governments need to do? If you just give 1 or 2 examples that continues to stand in the way.
So one example that's very important is that when you take power, most of the state-owned utilities across Africa are actually not financially viable. So they're loss-making, and not a good bankable credit. So if you are selling power to somebody who is loss-making and isn't very credit-worthy, the people who are financing you to build the power station are obviously concerned that those payments come through. So we spend a lot of time, money, effort, will on sort of putting structures around these projects to compensate for the fact that the person who's buying your power is not bankable. So again, if governments really took some hard steps to make these entities more bankable. Now, in many cases, that would involve increasing electricity tariffs, because very often the tariffs which are being charged don't cover the costs of, or fully cover the cost of delivering the power. So, if you're not able to charge an amount that covers your costs, clearly you're not going to be a financially viable entity.
Okay, so in this instance, in this case, for instance, it could turn into a political will issue where,
Yes.
Maybe there's a government that's looking forward to elections. They don't want to increase tariffs because they don't want to agitate the citizens, and
Yes,
et cetera. So it's all...
Of course, increasing tariffs is very politically charged. And of course, the longer you don't increase the tariffs, the bigger the gap, and therefore the more you have to increase the tariffs to get you to equilibrium, and therefore the harder it becomes. So you kind of get into a vicious cycle where it becomes increasingly harder to increase the tariffs. Now, certain countries, do have bankable or at least quasi-bankable levels of tariffs. Kenya, for example, is quite good at charging the tariff and moving the tariff as circumstances change. South Africa is sort of there. But I think, most countries probably do undercharge for power. You just have to look at what people are willing to pay in terms of, having generators, sometimes solar systems. These household solar systems, for example, can be extremely expensive if you work them out on $1 per megawatt or kilowatt hour basis. But people are prepared to pay that because obviously the cost of not having power is very high. But when it comes to doing it, through a government-owned utility, that becomes a little bit more political. And you can see what's been happening in certain countries that have, maybe not power prices, but that have raised prices and what happens. So you can understand the reluctance to do it, but at the end of the day, it probably has to be done, which is why I talk about, biting bullets.
So are you more optimistic for 2018? Because obviously these issues still remain, but regardless, a body like the AFC, and I know the IFC, AFDB, they continue to give out, money, cash support to many African governments. Are you more optimistic for a better infrastructure, better cash coming out, going to Africa this year into infrastructure?
Yeah, for sure. As I was saying before, we saw a distinct slowdown in 2015, 2016. Mainly led by the fall-off in commodity prices. We've already seen, and this is why I can be so confident, in 2017, we've already seen a lot of people who had maybe pulled back, re-engaging. But the sort of projects we work on take some time to close. So in our pipeline, we're working on, for example, as I think I mentioned, solar projects in Nigeria. We're working on a new airport project for Rwanda. We're working on a wind farm project in Djibouti.
So, but putting those projects together, were they very, on a scale of 1 to 10, how difficult were they?
Difficult in what sense?
You talked about the models in Brazil that's already there. You just change a few numbers. I'm just thinking, how is it I know probably on a case by country basis, but in terms of putting it together, getting all parties to the table, working out, hashing out the details.
It varies depending on country, but one thing I would say that's maybe slightly different from Brazil is that very often these projects are one-off projects. Okay. So, Rwanda, for example, is a fairly small country, and, it's got, an airport in Kigali now, which is the international airport, which they want to move. That is, they're not doing, one airport every year that they can have a template. So, it's somewhat one-off. But as we all know, Rwanda is a great place to do business in. So, we're finding that moving forward. A lot of the projects that we do tend to be pioneering and the first in a country. So for example, the wind farm project I'm talking about in Djibouti will be, I think, the first IPP wind project. So there'll be a certain learning curve that both ourselves and the government will have to go up. They have a great wind resource there, so hopefully once we've done the first one, then either expansions or follow-ups can come a lot quicker.
Okay, Andrew, we're going to have to leave it there. Thank you so much for talking to us today. Very good insight there on how African countries can raise finance this year.
Always a pleasure.
Thank you so much. Andrew Alli, President and CEO of the African Finance Corporation.